I'm going to be straightforward with you guys. I'm literally coming in here, absolutely no PowerPoint, no nothing. So I'll be happy to, meaning that I'm just going to kind of jump right into the live markets. But yeah, I'm not going to hit you with any sales pitch or anything like that. I'm not even going to attempt it. I just want to have some fun. I want to stick with pure, I guess you could call it education, but really I want you guys to kind of see it from a different perspective. I'm sure that a lot of you probably already trade supply and demand, methodology, or at least you're probably aware of it. Well, I hope you are. But if you're not, I'm going to kind of give a concept today that I would like for you all to be aware of. At the end of the day, my goal is always to help people see the financial markets a little bit differently. Or again, it could be the way that you're already looking at it. If you're already well aware of supply and demand and how it functions in the market. So it really does relate to any and all markets, any and all time frames, et cetera. But you'll hear a lot of people talking about which time frames they trade, including myself. We all have our personality driven time frames. But the reality of it is, and this is just my opinion, is that supply and demand is on every single time frame. We know that to be true because every single time frame has price moving on it, right? And that's okay. But I'm not a big advocate myself. And again, this is, please don't, I'm not saying that it's not great and everything. I'm just not an advocate of scalp trading, but let me really tell you why. Quite frankly, because I couldn't make it work. So for me, everyone has their own reality of the markets and their own perception and their personality of trading and so on and so forth. But yeah, my reality is that I just don't want to interpret so much data that it's confusing to me. I would rather simplify things and try to not trade so much, right? In other words, maybe I can place 2-3 trades a week, sometimes maybe even less, right? And do, hopefully as much or more than I could placing 10, 20, things like that. And again, this is just from my experience. I did not do very well. Okay. And so I'm just, just trying to throw that out there. Perhaps there are a lot of you that are doing amazing, and that's awesome. But yeah, my reality is supply and demand is on all time frames, but the institutional supply and demand, meaning the big, I call it just piles of orders all over the place, but those orders, order flow, if you will, again, it's my opinion that the big piles are generated on the larger time frames. So that's where you're going to find your, I would call it, more major market turning points. And again, it's just because it takes longer to work out, and it obviously takes a lot more money and the ability to place those orders, right? So I certainly don't have anything like the institutions. I wish I did, right? But let me go ahead and get started. I'm going to jump right in. Hang in there, guys. Let me pop out. I'm going to try to get set up real quick where I have the chat. Because like I said, I'm not going to hit you with a PowerPoint or anything. I'm just going to jump kind of right in because I want to, my goal today is just to see, how many people do we have that truly want to make this, their career, or how many people are interested in supply and demand. And I am not trying to sell any of you on it. I'm just trying to get to the people who perhaps already know that's what they want to do, or they do want to just see something different from what they've already seen, or whatever the case may be. But I promise you, I'm not gonna hit you with any sales, anything like that. So let's see if we can try to just maybe learn some concepts today. Now notice, guys, this is a different color background. I just noticed it before I jumped into the room. Generally my charts are all white, but what I noticed is a little bit more difficult to see. So I said, well, let me just darken the background. So if that's, I don't know if it's going to be good for you guys or bad, but I think it'll be a little bit easier for you to see the zones once we get going. But if I open this chart up, this is just the S&P real time. So this is happening right now as we speak. This is the daily chart of the S&P futures December contract. This is, one of the more popular markets amongst all futures, really. But there's, pretty much all markets are going to function the same, meaning that they're going to decline to where the massive amount of buyers are, and they're going to rally away from that area. Price is going to rally up to an area where there's more sellers, and thereby declining from that area. And I get it, trust me, that just sounds awesome, doesn't it? It's like, wow, if I could, if I really knew all of that, we could be gazillionaires. And that it would be nice, but the reality is we don't. However, we can simplify it to the best of our ability. So in order to do that, guys, let me go ahead and get started. I don't want to be rambling on and all that. So I'm going to get started with the most basic concept, because today I'm going to talk about ranges, and I'm going to talk about market turning points. And basically, I'm going to hit you with a lot of information today. So kind of be prepared. This is all being recorded. Renee will be able to get it to you, as will we. We'll talk about that later. But be prepared for a lot of information. So just talking about ranges and market turning points, we're going to actually be able to cover a ton of stuff, so that hopefully the information alone will just kind of give you a little bit of an epiphany, maybe, and go, oh, I didn't realize the markets functioned in that way. Now that I know that, however, maybe I can use whatever you're currently using, or who knows, right? But supply and demand can always be implemented into any, in my opinion, all trading systems, trading strategies, analysis, anything and everything, because the markets always function on the supply and demand. So the question is, are you going to be able to define where it should take place in advance? And then what are you going to do when you get there? All right, so first, let's go ahead and look at a range. And so I'm just going to draw a box, right? Don't worry, I'm not going to stick you on a gray screen for but just a moment. I'm going to take you right down to price. So let's say, for all intents and purposes, that price, had moved up, okay? Now, what I want to understand just about the most basic concept here is what happens in the movement of price. So we all know that there's or we may not, and I'm trying my best to educate. I'm going to try to move a little bit fast and not talk about the most basic stuff, though. So like a tick increment, what is a tick increment? Hopefully you know that, but if not, just do a Google search of what is a futures tick increment, and it'll probably give you a good answer there. Probably better than I could in a quick moment. So a tick increment, though, so if we move a tick to the upside, right, we are by definition going up because we are filling orders, right? So we don't just sit still. We're generally moving in any given direction. So you probably heard the terminology up, down, or sideways, and that's true. I mean, obviously, where else are you going to go, right? So we're either moving up in a diagonal fashion, down in a diagonal fashion, or sideways in some diagonal fashion, right? But at the end of the day, that's pretty much all we do. So as we're going up, and I'm not just talking about an uptrend or an upswing or anything. I mean, just literally as you're moving up, at all times, what you are doing along the way up is you're filling those sell orders. So for all intents and purposes, let me explain it like this. So you begin to move up here, right? So there's going to be a little bit of sell orders here from resistance, little sell orders here from resistance, and so on and so forth. You are literally going to just have, again, think of these as little piles of sell orders, and they're all along the way up. But the problem is, generally, most people don't know, that's not fair of me to say, who knows, but most people that have come to us don't really know how to filter this out. They don't know how to get to the right ones, right? So sometimes they do well, sometimes not so much, and they're questioning, how do I get to a point where I can define these locations? So I'm going to try to help you with that today. But first, just get the concept of it. As we move up, there's going to be little piles of resistance along the way. This is caused by many things, guys. It's going to be previous price action, like pivot highs, pivot lows. It's going to be caused by Fibonacci ratios, Elliott waves, candlestick patterns, you name it. And generally, they're going to line up to offer some form of support resistance. But ultimately, price always has a destination. I don't want to say always, but I would say 99.9% of the time, it has somewhere that it's trying to go. It's just the little nuances along the way, right? It's kind of like the little annoyances that give us little pause, and but again, it's kind of like, all right, we just shrug it off. But at the end of the day, we're going pretty much where we're heading anyway, right? It's just how fast are we going to get there. So along the way up, like I said, just kind of understand the concept that we're going up, we fill the orders, we go up, fill the orders to the sell side, and every single tick in the market, every time we make a new tick higher, we have just consumed the sellers that was at that previous tick, right? Okay, so the same to the downside. Let me explain that real quick, and then we'll just kind of move forward into, get to real price. As we're moving down, I know this may seem like, what in the world is this guy trying to tell me? Because this is not important. I promise you, you will see it in just a moment. It is the most important thing that I could probably ever show you. That's why I'm here to help today. So as we move down, the opposite is true, right? Remember, when we were moving up, we're consuming those sell orders all along the way up. And it is physically not possible. So when we trade up above one of these piles of orders, when we go above it, so it's not possible for those orders to still be there. They would instantly be filled, right? A market order, instantly filled. A limit order says by definition, sell me at this price or above, right? Instantly filled. So all the orders, again, when you go one tick above that pile of orders, they're gone. They cease to exist. One tick above this pile, they're gone. They cease to exist, and so on and so forth, all the way up to whatever the high value actually is. Now, when we're going down, the exact opposite is true. As I'm going down, I'm filling it's some sell orders getting filled, but what I'm focused on is the buy orders, meaning that they're completely consumed. So as price is dropping, let's just use these same things back here. It's going to come down to this pile of buy orders. It is going to consume them, and we'll know that to be true when we're one tick through them. They cannot exist anymore. Right? So then we're just going to go to the next one. We're going to consume those. That's where you're going to get a little bit of resistance, maybe a little bounce, something like that. And it's going to consume those. We're going to know that one tick below, and those orders cease to exist as well, right? So again, it's just what we call trading through the price values. Again, once price trades through something, it ceases to exist from historical. Now, I'm going to explain a little bit further as we get going, but I do want you guys to just kind of understand that concept. What I'm going to, in addition, add to that is to tell you that none of us, guys, I mean, from a humble place, none of us know everything about supply and demand. Really, the reality is it's always subject to change. That doesn't make it subjective. In fact, I'm going to show you how easy and not easy, but how methodical it can be to follow it. But the reality of that is there's no way for us to predict the future, okay? We can't predict something that doesn't give us information. So we're never trying to predict a top or predict a bottom. We're saying this is where, supply has exceeded demand or vice versa. And we understand the concept of getting to and from. All right, so who likes the look of this chart? I don't. I think it's a disaster, and I could never look at this, right? So I just threw it up here because I want you guys to see how conflicting and confusing even supply and demand can be. But, and this is why I'm super excited. We're going to have, I don't want to put the cart before the horse, but we have a software launch coming up, pretty soon that I want every one of you guys to see. Not going to cost a dime, just want you to see it, and so on. So we'll get with you guys maybe after the event and show you how to sign up for that. But again, no cost. Don't worry about any of that. So the ranges in the market. All right. So if we open this up, we can scrunch it up. This is the price movement since. Let me scroll my chart back. This is actually where that. I'm not going to call this a crash. It's just a very strong, pullback, if you will. But this is the beginning of the year for the most part, right? February going back to January. So this is where all that big decline happened. And this is the single range that has literally caused us this entire year to be range bound until most recently, right? So all we were doing the entire year is trading between the top and the bottom of that big range. It's very important. That's very important that we grab that concept. But let's go ahead down where we establish our low, all right? Don't worry, I'm going to remove all this stuff in a moment. Now, ironically, we have literally gotten our software to a point. Remember, we've been doing this for a very long time, and we've literally gotten it to a point where we can just essentially rely on it, right? Supply and demand is, in my opinion, one of the most difficult things that there ever has been to automate, but we were able to achieve most of what we wanted. I think you'll see what I'm referring to today, but let's go down here to this established low. So what are you even looking at? First and foremost, let's remove these from your price chart. Wow, we just cleaned up the chart a lot, right? So all I did was remove my smaller time frame supply and demand levels. That's all I did. So what you're looking at now is all both the historical and the real-time supply and demand levels. Essentially, guys, this is everything that's been printed for the entire year, okay? So all of these zones that you see, they were there in advance. As you can see, the real-time zones now. This is actually one that we had today. So as you can see, we dropped down to it and just bam, we've just, you know, expectation of a new high, by the way. So that's our most recent demand level there. Our most recent trade opportunities that we've discussed was right here. It's 68.75 was the exact number. Before that, we had a buy opportunity right in through this area here as well. We've had many opportunities. But our trades, just so you guys know, we're not scalpers, as I said. We're looking for the true turning point. So the last two trades, I think, that I just showed you, they're all recorded, by the way, of course. But they were, let's see, I don't really want to talk about, I'm not here to talk about money and try to woo you or anything like that. But I want to say the risk to reward on those was about 10 to 1, something like that. It was pretty close. So that's what we're really focused on, is risk to reward ratios and just understanding price movement. So let's go ahead and get started right here, because this is an established low, right? I mean, this is the bottom of that range put in at the beginning of the year. We just literally could not get below that. So just so you guys know, and I just want to disclose all of this. For any of those of you who maybe you decide to become a member, that's great. You would instantly, yearly lifetime members, you'd be able to actually go back and see all of this done in advance. So we record every session. Yeah, all that's recorded. So I'm not going to say anything today that you wouldn't be able to see anyway. There was a level right down here. So we were actually buying the market right into this area here from that established low, just because we, you know, it put in the low and we're in a long-term uptrend, and we said, hey, here's an established low, let's trade off of it, right? We see where the top of the range is. We just wanted to focus on the bottom of it. So here's kind of a piece to the puzzle. What is a range, right? Like who can even define that? How many of us think we know what a range is? Probably, I would say the majority of us, you know, including myself, right? I certainly think I know what a range is, but if I tell you what a range is, you may disagree, okay? Everyone has their own definition maybe of like what a range is and how to approach it, anything like that. So what I never do is approach it as if my way of thinking is the only way. I think, however, my way is a very simple way. So hopefully it will resonate with you as well. The simplicity in this is I get to see this on my chart way, sometimes months and years in advance, guys. But I mean, not for day trading, obviously. For day trading, typically, and I don't do a lot of just sole day trading. I just don't have the time. It's not possible for me. Any of my members could tell you that. But I do what's more like a hybrid of day and swing trading. I get into the positions during the day generally, and I will exit at the end of the day. But if price is moving, you know, greatly in favor, then obviously I just hold on to them. I just let them go, you know, until my destination is reached. So that being said, let's go ahead and get started down here off of the established low. And I'm going to get started right here because I could start anywhere on any market, but I just need to move forward and get this done pretty quickly. So right here we have a low, right? It's just turning from this. I'll show you real quick. So here's our demand level. Okay, so what you can see, excuse me, is that down here in this, which is our larger time frame demand, we had a significant demand level. We know that because our software printed it, right? So all of this is automated, by the way. So that was my buy opportunity. That was it right there. You know, actually, this was the first one right there. Excuse me, I'm double clicking. That was the first one we had to establish the original low, and then we got more buying opportunities over here, followed by another one here. Basically, the white and what you're going to see as blue in a moment, those are our supply and demand zones from the smaller time frame. These big red and green ones are the larger time frame. So we're incorporating two time frames. We don't need to complicate this. I don't want to make it sound too simple. Your ability would come in to reading the market, guys. At the end of the day, I teach you exactly how to do it. There's, it's very methodical, objective. But I don't want to, I don't want to sugarcoat it. It's hard. And the reality is it's not just a black and white signal that you're going to get. I mean, again, these are all there in advance, and I think you'll see how easy it is. But you have to be patient. That's the problem, right? That's my problem. I think it's all of ours. It's very difficult to be patient, so it requires a little bit more finesse, if you will. So down here, that was the demand level. And then, of course, we get this large rally off of it, right? So the question then becomes, you know, okay, that's great. So I can buy down here. That's my entry point, the top of that zone or into it. And the question then becomes, well, where am I going to go, right? And I can see this big red zone right here. So this is the larger time frame supply. So my instant thought is, well, look, if I'm turning from demand, obviously I want to go find the supply in the market, and I'm going to bounce between those two until one of them takes control. When that happens, boom, now I know, and they can't hide it from us anymore. Okay, so when one of them takes control over the other, we now know which range should hold. So let's look at it like this. We would say, okay, so I bought down here for all intents and purposes. And I could, so, you know, let's say we set our profit target up here before this big red zone, something like that, right? But conversely, I could be prepping myself to sell up here. All right, so let me turn off the demand levels. And I'm going to turn on now the supply levels, okay? So notice right up here when you get into this red area, it's above this structure. You'll understand this in just a moment. So that is our sell. That's where we would enter to go short, right? Again, the question remains, where do I go? So as you can see down here, we have the larger time frame demand. So yet again, I'm selling from supply and I'm trading down to larger time frame demand. Conversely, I could then prep myself for buy opportunities, right? Because right now, remember, we don't know who's in control of this market, right? It hasn't taken out that established low yet. So, you know, the sellers are not in control, but at the same time, the buyers from this area have not taken out the supply either. So we don't really know, therefore we're looking at, you know, potential short-term opportunities trading back and forth. Now here's when we get into the fun stuff, right? Let's turn all this off for a moment. Here's that range that I was talking about. So from the low up to the high, right? In other words, from the low of this swing to wherever it stops, that becomes, and this is, you know, my way of thinking and approaching the markets, but this is a range, right? And the reason I said that earlier is because, look, a range could be, and even to me, it's a trend. It can be a swing. It could be even a huge candle, right? But what it really is, you know, again, to me, it's just the distance from one point to another, and I use it on the larger time frame swings and the smaller time frame trends. So there you go. That's how I define it. I use the ranges of the large time frame swings and the smaller time frame trends, and I do that because, and here it is, that's actually the same thing, right? So what does that mean? Well, look, on the smaller time frame from this point right here to this point up here, what do you think that's going to look like on a smaller time frame? An uptrend, okay? But on the daily chart, the larger time frame, it just looks like a big swing up, okay? So there's a lot of ranges within ranges and trends within trends and all that. That's why I always say, look, simplify it, don't complicate it. The reality is it's going to turn from these areas anyway. So just find a way to get on board of that, that price movement. So remember in the beginning of the presentation, I said very, very methodically, very clear picture, if you will. And in fact, there's actually a range right here. So again, it's just from the swing low to swing high. So what do I know right now? If I were to extend my chart, let's do it like this so you guys can get a very clear picture. This is exactly how the market functions. And just so you guys, you know, just so I don't confuse you, I'm going to do this. Okay, so I'm going to go back and delete all these zones so that, you know, it's easier for you to see. Okay, so right here we have a range from the low up to the high. Now that in itself tells me one thing for 100% fact, and this is just the reality, is that up removes all sell orders, right? Remember we talked about that. It's not possible. So I know now that I have traveled this high. Price has vertically inclined, or diagonally, if you will, but we've moved higher, and 100% factual statement is that there is zero orders back here, and it's not possible, okay? Not that was originally placed. Now we can place more over here. that's why I was telling you guys before, anything is subject, at any time, I can't predict, if they're going to place new orders at that same location again. I don't know that. What I do know is factually that once I move through it, the original orders are no longer there. So what I can do is take the top of that range and I can move back. And I can say to myself, what am I trying to trade? Well, two things. I'm trying to trade both the old and the new orders because I want a combination of things to move price in my favor. If I have two things working for me, that's better than one, right? But I also know that if I'm going to be a seller in this market, I absolutely have to do it where supply exceeds the buyers, where the sellers exceed the buyers, and most importantly, where the sellers are, right? So understanding the concept of the range, I can take this entire area and remove it from my price chart as if it never existed. So if I were to paint this area entirely black and you couldn't see any of these candles, that would probably be the best way to approach this. I don't have time to do that, but you get the picture. Just remove all of this from your thought process because it's no longer there. So what I need to do is say, okay, well, if that range, if it's already been this high, is there anything above that and left that could potentially stop me? So understand, in a trend, we're making higher highs, or an uptrend, higher highs and higher lows, right? All we're doing is making new ranges every time to the upside. So here's our current range. I now need to say, okay, if I'm going to sell into this market, where am I going to do it? Well, I already see where my larger money sellers are. So I can already, and we're talking about, I don't know how many days it takes to get there, but we're talking about predefining something that could take a week, 2-3 weeks, maybe just one day, who knows. We can go ahead and predefine that. We can do that automated here. So I'm going to turn on my historical supply, right? It's very important because right now I'm looking for the sellers in the market, but I'm also looking for them at a very specific location. This is what separates a lot of supply demand traders that just can't get those the right levels. They're looking in the wrong locations. And I will say, unbelievably enough, the way that this functions is, it's crazy, even on the smaller time frames. What you're seeing, guys, just so you know how the software works, is right now I have the value set to only one retest. And that means as soon as the zone is tested, it's going to stop plotting right then. Okay. So wherever the zone stops plotting, that's where it got initially tested. Okay. So as you can see, even these smaller time frame zones, when they get tested, they are really working out very well. Look at that one right there. Again, all of these, this one here, again, another drop all the way down to here. This is why I'm so excited and so just proud of what we've achieved. And this is why I want you all to be in our events so that you'll see this going forward with the upcoming release. A lot of things we're going to be doing with that. But that being said, I know that sounds great, and we could focus on that for those short-term traders, right? The ones like for those of you who are scalpers and you want to do this more short-term, well, you have a bunch of opportunities. You really do. But we would not be doing it on the daily chart, obviously. We'd be using these smaller time frame areas, and then we would also use a smaller time frame than that, right? So multiple time frame. But right now, what I'm going to do is I'm going to focus on these, and the reason is because it is at my larger time frame location. So notice how clean we've kept the chart. You don't see a bunch of supply levels all over the place. You literally see two, okay? So what I can do right now is I could go up, well, of course this has already happened, right? We'll look in real time too, don't worry. I'll actually show you, maybe a trade that we presented in the room this morning or whatever you guys would like to see. But I could go ahead and place a sell limit order up here. Now, the reason that that is possible is because I have never been there, right? Remember, the top of this range stopped all the way down here. So I have never traded up through this, and our software is presenting the exact area for entry. So if I scroll forward, my expectation is I'm going to have a sell limit order there, stops on the opposing side of the structure. So obviously I don't want price to go higher. I want it to drop from that area, right? So that's when we go back to, okay, got that, but it's great knowing where to enter, but what if you don't know where to exit, right? That's kind of always a problem, isn't it? So when we enter at larger time frame locations, we simply go back to the opposing locations, right? So in other words, guys, I'm selling from supply down to demand, from demand up to supply. So if you scroll forward in time, notice what's happened from this supply level. Now, do bear in mind, guys, please, this is very important. We're entering intraday. So let me dive in here real quick. 17, that's 27.1750 to 27.23 3/4. Okay, so you're talking about, let's call it 6 points, right? Now, for those of you who don't know the S&P futures contract very well, that is $300 per contract. That's no big deal, right? It's a lot of money, don't get me wrong, but here's the reason it's no big deal. Because your target is way down here, so you're risking 300 to potentially make 5,000. Okay. Now, again, guys, please don't take this. I don't ever talk about money in a way that you're going to become rich. I don't do that whole thing, because I wish I could help every single person. But the people who focus on this, just go out and read like through our forum. Let them tell you, or I'd be happy to put you in touch, or whatever you want. Be kind of open book. But the reality is that. So we're going to sell from supply and look for demand. So here's the trick, though. Okay. Take this exact same thought process that we've been talking about all day, now reapply it, okay? The difference, here's the difference. We now know who's in control of the market, though, right? Because didn't the buyers take out this supply level to the upside? So the trend direction and all that is now different than it was before. It's up, which allows us to use the exact same ranging mentality, but we now know which one to hold and which one to exit early. So if the market is in an uptrend, we're always going to find the next pile of sell orders, always. And those sell orders are going to produce a bit of a bounce away, and the demand is going to continue generally exceeding those supply orders because the trend is up, right? And then that will change, and then the exact opposite becomes true, with the exception of a range-bound market. Okay. All right. So that being said, I can take that same thought process, but now price has been this high. So what do I do to my range? Didn't that just change? Okay, right? So my range just got this big. So for 100% fact, what do I now know about this market? I know that the buyers are in control. That's number one. Number two, I know for a fact that there cannot be any sellers left over here. So what I do is I say, well, where's my next destination, right? Look above. So I just go right above. Now, that being said, once we stick around an area, you have to ask yourself how many attempts you're going to take at it, right? In other words, I don't want to trade 10 times out of a large time frame level. But look, remember, we had 2. Okay, so we only had 2. That's how accurate our software can be. You'll see this in a moment. But yeah, so again, I know that I have to be above this area. So instead of doing it like that, let's just plot a horizontal line. And I would say, look, here's the top. That's how, let me do this a little bit better. Sorry, guys. There you go. Maybe a little bit easier there. So I know definitively my supply, if it exists, it must be above this area. Now, let's say that you traded this and you sold the markets here. Well, ultimately, I'm looking for price to decline way down here to demand, right? But for all intents and purposes, the direction is up. And so we would definitely want to be aware of that. It doesn't really change anything. It's just understanding that I should not go through this supply level. I shouldn't do that because the direction is up. So what I want to do is buy from the lows of the range and hold it through the top of the range, right? So now I simply need, and there you go, so profit, destination, and all that. So as I scroll forward in time, this is where a lot of people go, wow, this stuff can get, you know, what do I do now? Because I see a blue zone printing or this or that. You get very emotional, very confused, especially for those wanting to do a lot of trading. I call these internal levels, guys. And I visually, or I shouldn't say visually, more like mentally try to remove the visual aspect. Of course, I can go in here and delete these levels, right? But I don't need to because they're printed for a reason. That is supply. However, what did we just learn though? Isn't my line right here? So if I want to find institutional order flow, like big, big, big orders, I got to go above that. Let me tell you why. If I don't, okay, so if the supply from here is so strong, right? Meaning that this is institutional orders and it's the biggest pile of orders ever, then why don't you take out the low, right? Does that make sense? Because the buyers are the ones in control, not the sellers. We just know where the biggest piles of sell orders are, so we can trade that, but we need to understand that I would rather be the buyer in this market because I could hold on to that one. So sell at supply, exit just before opposing demand, okay? Now, here's my line. I want to focus on that line because now what I know is I got to go above it, and there's my next level right there, right? Everyone can see that level just above. So if I scroll forward, notice these levels. Do you see how you're getting these bounces away from almost every one of these levels? So like I said, on a short-term perspective, one could do a lot, but that's just not my personality, and I would prefer to hold on to the positions. So if you scroll forward in time, now you're reaching that upper level, right? So notice what happens when you get there. Guys, I have been doing this for so long, and literally to this day, I am amazed all the time, almost all the time, right? And it's fun because we get to do it in the room live, right? All in advance and stuff like that. So it's just fun because we get to have an interactive community. So let's understand the concept. What has now changed, right? What's different now? Haven't I traveled up? Didn't my range just change? So I formed a new range, didn't I? Because now I have a pullback down and I have another range. Inside of that range, remember, the buyers remain in control because they took out the supply in the market, all right? So in other words, guys, higher highs, higher lows, higher high. Why in the world would I expect anything other than a higher low? Well, I wouldn't. So show me significant demand. There it is. Okay, got it. So now, am I looking for supply? No, so turn that off. I don't even need to be aware of it. And this is how we can clean things up, right? So to simplify things, we're in an uptrend. I'm looking for a long position, but I have to do it at the right location. If I don't, I stand a very good chance of losing money time and time again, okay? So all I have to do is I'm going to go up here, flip on my demand levels, and here it is. I have one single level. That's it, just one. So I'm going to go down there and print a long entry, okay? I'm just going to literally, just like that. I could literally do this. Well, how long was the other one in advance? I mean, we talked about days, right? This one, we can count the days if you like. But let's say, because we noticed this, way back here, right? So we would know about that. So let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, a long time. 2 weeks, 3 weeks in advance, right? And again, notice your small time frame level right there. Notice how it creates a huge rally for days and days. I understand, guys. I know this stuff looks, really cool, and you might be thinking to yourself, yeah, but I would probably trade that too, and you maybe get as excited as I do. I agree with you that that's awesome for sure, but why not wait for the ones that have the absolute probability in their favor? So that's just what I prefer to do. In other words, guys, I qualify it by being in the right location. This one was not. For me, it was not. For small time frame traders, absolutely. That was a very good level, and they could have entered it even on a smaller time frame. It's just not for me. So I would be waiting down here, and it would take me for a very long time to get there, right? What we say, over maybe 2 weeks or something like that. But notice the reaction when you get there. So I have a buy limit order, 67.75 stops below the structure here. So I have very small risk, but here's the same question over and over and over. I'm entering at the appropriate location. Where do I go, right? Where's my destination? Because there always is one. So look above. My factual statement is that I already know where I've been, right? Up to this exact high right there. I'm sorry about that line color, but this high right here. So I rallied from this demand all the way up to the supply, ergo removing any and all sell orders up to that exact price point, okay? Now above that, I couldn't tell you, I don't know. That's why I would never go ahead and try to predict that. So what I would do is enter long here, and my target destination is going to be up here in this larger time frame supply, and I could get even more specific with it now. So I can say, okay, well, show me where the supply is, on the smaller time frame up there, okay? Oh, there it is, got it, Okay, so now I know exactly where to enter, which is way down here, and I know exactly where to exit the market. But here's the thing. Now, this is the reason I enjoy trading this way. Let's say for all intents and purposes, I do enter down here at 26.67 3/4, and I put my stops, let's call it just for easy purposes, 26.70. Okay, so 26.70 to 76 3/4, let's just call that 7 points, okay? Or wherever you enter, but let's just call it 7 points. So 7 at 50 is $350 per contract, of course. At 10 contracts, you'd be risking $3,500. All right, so do the math though. And that's very small, by the way, for the larger moves in the market. So if you're only risking $350 and my profit target can go all the way up here at 27.70, okay, you're talking about right at 100 points, right? So I'm risking $350 to make $5,000. Does that make sense? I could be, guys, I could be wrong at this 70% of the time and still make money at it. That is not the goal. Okay, if I'm wrong 70% of the time, I am not doing something right, that's for sure. So we want to strive for an excellent win to lose ratio, but the very important thing is the risk to reward as well. So we want to have both. We want to have a good risk to reward. We want to have good win to lose ratio. So again, all I'm doing, and this is how we've actually accomplished our software, we had one level for entry. Now the exception to that is if we miss this entry, of course we could look to the software to print a new level as well. Okay, so I'm just going to show you one more. If we move forward in time here, we could go up, right? Our expectation is to fall away, and then we would see demand and so on and so forth. So if I scrunch this up, guys, our next supply level is way up here. So in advance, okay, we're talking about months in advance from time to time, right? In advance, we could look up to these levels for a decline away. We just have to ask ourselves, what are we going to do when we get there? Okay, so again, we're still into this supply location right here, kind of what I told you a moment ago. Notice how it prints a new level over here, those blue zones. So we could literally have taken entry at any one of these blue zones and traded it yet again all the way down to larger time frame demand. Conversely, we prep ourselves to do the exact opposite, right? So we're selling above, looking for demand below. We have these demand levels right in through here. I'm looking to buy here, exit above, just like that, guys. So what I'm doing is keeping it very simple. I'm simply showing you in an automated way the location. I couldn't be any more excited and thrilled about this. I wish I had more time. Unfortunately, I don't. But I promise you guys, big things are coming for us and our company. Very exciting things with the software and the ability to keep it this simple. We're going to be doing lots of things. And if you want to get into our free events, we can show you all that, explain it to you. But essentially, I will even eventually be able to just place a button, hit a button, and let everything, let all the orders, get placed for me and everything. So saving me a lot of time. All right, guys, pop out some questions. I think I'm the last one of today. I believe I am. So if you have any questions, let me know, and I'll get them answered right now. Renee, is it okay if I take like 3 minutes and just address any questions? Would that be okay?
Yep, that is perfectly fine.
You rock, Renee. Thank you so much. All right, guys, if you have any, let me know. If not, I understand. What I'll do is as you guys are posting that, I will just post the link to you all. So you can just sign up. It's, again, free, guys. So you can sign up for our free events and things like that. I'm going to be able to, I can take as long as I want, in our room. So no problem if you want to get signed up for that. We'll be doing an event early this coming week. So we can explain this a lot further. I love the simple price action. You and I both, that's for sure. You and I both. Hey, Renee, just to confirm, am I missing any questions? Are they coming in, or am I looking at this wrong?
The last question I see is, can we visit your trade room, and what is your success rate?
So I'm not going to talk about success rate. I will talk about that in our room. I never talk about that in these events, guys. I'm not here to make you money at the end of the day. All right. So I'm not trying to disregard the question. I promise I'll talk about it just in our room. Yeah. So I don't know how I'm missing the questions. Try it a different way. Okay. Okay, so I guess I just don't know where to start. Yeah, the success ratio. Yeah, John, again, I'm not trying to, I would let you, the thing, what I'm trying to tell you, John, is I would actually let you hear that from the members. I don't want to tell you myself because I'm not a sales guy. I don't want to, it's not a gimmick. This is no gimmick. This is reality. And I would rather you hear it from them than me, right? So I will be happy to put you in touch with someone. No problem. Just get in touch with me and I'll let you hear it from them, not me. How's that sound? A little bit better? Yeah, a little bit better, I think. Can you visit the trade room? Absolutely. Visit that link, get signed up for the free stuff, and then we can keep you updated on anything and everything and we will put you in the room, no problem. You put your info in the chat box. Yeah, absolutely. Go ahead and hopefully you're talking about that. But whatever you need, Johnny, if I'm missing something, let me know what information you're referring to. And yes, of course, man, I'm absolutely happy to do that. Anything. Thank you. Yeah, Jay Lupo, if you can also just navigate around the website, but that's the direct one to the free sign up, and just you can contact me directly through the website as well.